Welcome everybody to this video. My name is Ali. Today we're going to discuss chapter 5, market patterns of this crypto course. Let's just jump right into it. So I've divided this chapter into 5 parts. The first part we're going to talk about the behaviors of the investors. The second part we're going to dive deep into the market patterns, the well-known patterns that are forming in the charts. Not everything of course, but the patterns that are forming most of the time in the charts and what to do with them, how to trade them, and so on. The third part, we're going to discuss the cheat sheet. The fourth part, we're going to do a little exercise. And the last part, we're going to talk about the future of cryptocurrency and what to expect. Well, as a behavior, as investors, we need to realize that we are all human beings and we have a certain behavior when it comes to money. If you give somebody money, people will become happy. If you take it away, people will become angry and will be more emotional. In order to analyze this and to take this at your advantage to maximize your profit, you need to understand not only the asset that you're investing in, but also the people that are in the market and the situation that is happening around the world. Because all the news that is happening around the world, and especially the influence of media, they have an impact on our behavior, on our way of thinking, and eventually it will influence our perspective on the market, and it will lead to making decision based on rationality and also emotionally. And if you want to be a perfect trader, well, a perfect trader, if you want to be a good trader, you need to understand human psychology and a trader. Be rational and emotional. All right. So if we look at a coin, let's see, for example, you find a coin interesting that is a project that's happening in the crypto market. First of all, you're going to do the fundamental analysis. The fundamental analysis is the most important analysis you have to do before you invest into something. So you're going to do your research, watch the company, their goals, what their ideas, their vision. You're going to analyze the industry as well, their economic conditions, and the future profit outlook. Where are you going? You also have to ask yourself, if I see a project that's very interesting, is it overvalued or undervalued? If it's overvalued, you're just gonna wait it out till people sell, and then if it's undervalued, you're just gonna step in and sell at a higher price. Because at the end of the day, as investors, we are here to make money. Okay, you can also put your money into something to help society to develop and so on, but most of the time, we're just here to make money. If you look this at technical analysis, you're looking at the moving averages, you're going to look at the charts, you're going to look at the indicators and so on, because the charts, they're also giving you an indication of where the market is going. Is there a continuation of the bull market, or are we going to reverse the market and switch over to a bear market? Yes or no? So these things, they all have to um, be taken in consideration if you want to make a decision, all right? And especially when you look at the emotional side of a trader, excuse me, was still in Dutch. You have to look at the fact that a lot of people that are trading, they are they are new to the cryptocurrency and new as traders. They have a feeling which is called FOMO. This means fear of missing out, because they see the market is going up and up and up, and they're like, if I bought this asset at this lower price, I would be um, at a profit of 300%. So if I'm not gonna step in now, I'm gonna miss the profits, and it's gonna skyrocket. You have to keep in mind that Warren Buffett, he said the following: if people be fearful when people are greedy, and be greedy when people are fearful. So if you see the market is literally going vertical, it's just increasing in price. You have to be fearful and don't touch it. Stay away from it. Wait it for it to come down and then jump into it. You need to understand what kind of risks you're taking in order to be a profitable trader. All right. So this is basically, in a nutshell, the behavior of human beings. Be more rational rather than emotional. All right, the investor's behavior. If you look at this cheat, it's called the Wall Street cheat sheet. I'm going to zoom in a little bit for you guys right here. So you can see that all the emotional, the emotional cycle of a human being that is displayed in the chart. All right, and with the emotional um, side of the market, you can also verify and understand where we are currently in the market. Today is the 30th of December 2021. So we can understand what the market is now. We are not in a bear market, definitely not. From my perspective, we are still in the optimism market, but we're just taking the road towards euphoria. It's not just going to a vertical line, it goes with dips as well. So you need to understand it as well. So these dips are meant to buy, not to sell, but to buy and fill your portfolio in with the coins that you really liked before, but you didn't have the money right for it. So if the market is crashing, correcting, see it as a discount. All right. So know the market psychology. If you understand this market, you can understand when it's a good time to step into the market, not just to wait like the next cycle. Just look at the emotional cycle. You need to have a strategy in advance to adapt on the situation that is happening in the market. Watch the indicators such as the trend. The trend is your friend until the end. Trend first, indicator second. That's the saying, okay? The golden rule. Trend first, indicator second. Watch the price movement and watch the other indicators because all these indicators give you a perspective of what is happening in the chart. The more indicators you have, the more perspective you have. And it is also good to be neutral when you look at the chart with less emotion involved. So look at famous traders, what their perspective is on the market. Let's say, for example, I personally am very bullish when it comes to cryptocurrency, especially in the long run. But for now, when it's 30 December of 2021, I still believe that we're in a bull market, but we're just correcting a little bit. People are taking the profits. People who are over leveraging themselves are going to get flushed out, and that we are going to continue. And people who believe we are in a bear market, respect their views, just listen to it and see what they have to tell you. All right? Characteristic of a rational trader. Be patient, waiting for correct entry. Simple as that. Break down, retest, and volume follow up. So you just gotta be patient when you're going to take a leverage position. Okay, when you're shorting the market or when you're longing the market, it's all timing is very important in the market in the investing world, especially when it comes to leverage trading. You need to have good risk management and also cash out target and be less emotionally susceptible. So be prepared for what is yet to come. And if the situation changes over time, you need to adapt with your strategy as well. So not only have one strategy, you need to have different type of strategy. When the market's going up, when are you going to take profits? When the market's going sideways, what are you going to do? And when the market's going down, are you going to short it or are you just going to accumulate more? So these are the type of scenarios that you can think for yourself. All right, the investor's behavior. Let's just look at this image. Let me zoom in again a little bit for you guys. Let's zoom in. Okay. So there's this guy. He's telling, I got a stock here that could really excel, meaning it could really excel, meaning it's increasing in price. This person, he hears really excel, and then this person hears excel. This person misunderstood him. He told, and he was hearing sell, and then he repeated again sell, and then everybody's selling. He sell, 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 sell. This is the chain reaction. What is happening within the market? If you hear a negative news in the media, people are blindly gonna accept this news as a truth without reviewing it, without researching it, and then they're just gonna repeat it, repeat it, and repeat it, and this will eventually have a chain effect, and all these people will be emotional and will sell out of fear in order to take the profits what they have now or to reduce their losses. That's how people are, and sometimes this is what happens in the market. Everybody's screaming, sell, 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 sell. This guy's screaming, this is madness. I can't take it anymore. Goodbye. And this person hears, goodbye, buy. And this person hears again, buy. And then everybody's screaming, buy, 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 buy. So what this image is indicating is like the majority of the traders, they are normies. They don't understand how the market works. They are very emotional. And this is, if you want to distinguish yourself as a trader, you need to distinguish yourself by being less emotional when you look at the charts and what is happening, what is being displayed in the news. Always think rationally. That is what distinguishes a good trader from a bad trader. Well, not a bad trader, but a beginner trader. All right. So this is what FOMO means. People are like they're fear of missing out. Oh my God! If I don't buy this asset, I'm gonna miss out all the profits. I'm just here to make quick money. you can never make quick money in the world, okay? You need to understand what you're buying. All right, now we're going to discuss the characteristic of emotional traders. They don't have any patience at all. Like being patient is one of the most important characteristic that you need as a trader. And that's also what I learned the hard way. Start investing when the market reaches its peak. That's what the emotional trader are because of FOMO, fear of missing out. They have no proper risk management and they hope on getting profits. They don't have the right targets. All right, they just keep hoping and hoping and hoping. Oh, I hope this is gonna go up. This is gonna go up, but they're not rationally. They're emotionally prone. The price swings, they become very emotional, and also what is happening within the media, they also become very emotional. They don't understand that the media is a centralized organization, and the people they are basically selecting what kind of type of news they are publishing in the media. So you need to understand that if something is centralized, you need to understand this is a person's perspective of an individual of a group of people. So this is how much power they have. They can just basically make the majority of the beginners of retailers emotional, including me, and then they will take the profits out of it. There was also like a story. I don't know if this is real or not, but this is what I learned when I was studying business economics on the of University in the Netherlands. Um, well, my teacher, he told me that there was a famous person. He was very well known with a strategy and analyzing the market, and he had a strategy like he was selling all his position in a certain company, and he spread the news that this company is gonna go down or whatever, and he sold it with a big profit. And when the people saw this asset decreasing in price, like it was literally crushing in front of their eyes, they sold it like out of panic, and then they had the domino effect. The asset of this company was like completely getting destroyed, and this famous person, famous trader, what he did was when he sold it at the top or for a fair price when he was in a big profit, he just bought it all up with a discount and with his profit, meaning he just accumulated more and increased his portfolio over time instead of holding it. So this is what they're doing. They're using their power and um, their power to emotionally um, hypnotize all the newbies out there. This is what they do. And this is a strategy, but in order to understand their strategy, you need to have knowledge about how they do it. All right. So this is really challenging when it comes to investing. That's what I love about investing as well. All right. The market patterns. We're going to discuss the general information about it. The market patterns, they indicate the price, price movements, excuse me, of the following hours, the potential price targets, when to take profits, and so on, the way other traders trade the market, because all the traders are looking at the same chart and they're looking for the same patterns. The emotional state of the market, all right? And the purpose of the market patterns are a confirmation of the trend, if the trend is going to continue or if the trend is going to get broken. And with the right strategy, you are able to make quick profits, definitely. Where within minutes, you can make like 100 to $1,000 or euros profit. But you need to understand how it works, all right? And it's also a way to shake out the weak hands. People who don't understand the market, they don't understand how trading works, investing works, they're going to get shaken out. The smart money are going to take the money out of the dumb money, with all respect, and then they're just going to continue. They're literally just stealing the money out of your hand in a legal way because, yeah, that's how trading works. All right, so now we're going to discuss some of the chart patterns. Um, so one of the famous chart patterns is called a double bottom. It's basically like a W, okay? It's a strong bullish pattern, meaning that the market is going to continue, and it looks like a W. On the smaller time frame, meaning on a 4-hour time frame, you can see two double bottoms over here. You can see it over here and over here. And on a bigger time frame, which is over here, you can see one W. All right? So I'm going to zoom in a little bit for you guys so you guys can understand it. Let's zoom in. So over here, you see this. Excuse me. Let's just laser. Oh, no, no, no. Let's zoom in. And then we took a pen. Oh, I can't zoom in. You can see the double bottom over here. All right. This is a W. And then you can see another W over here. All right, and this is done in December 20th, like last year. This is when I made this presentation, 27th December. Okay, and if you look at the date over here, it's also the same time frame, but it's on a daily time frame. This is on a 4-hour time frame. On a 4-hour time frame, you have more specification what is happening in the charts. And in the longer time frame, you can only see one W pattern being formed. Look, one W over here. And this is two W's. So this is basically this. That's why it is really important to look at the charts in a bigger time frame and also in a smaller time frame, because in a smaller time frame you can make more profits, short trades, quick money, and on a longer time frame you can take low leverage trades and make money on longer time frames. This is basically what you got to do. And how to trade this pattern is very simple. I'm going to discuss this as well in chapter 9, so don't worry about it. So if you see this pattern being formed, this W over here, all right, this is what you got to do. If you see the pattern is being formed, you need to understand that this is basically the neckline, all right? If the market is breaking out of this neckline, you need to enter a long position over here and take a stop loss over here. Here is the stop loss, here is the entry point. And to measure where the market is going, you can measure it by drawing a line from the neckline till the bottom. This is basically the line, and if you paste this one on top of this neckline, you can see where the market is going, and then this is your take profit. All right, so basically if you look at this chart over here, boom, you can see on the December 25th of November 2020, I'm gonna show you guys in TradingView. Wait, give me a second. What am I doing? Look, in TradingView, okay? So here's TradingView. Let's go to December 20th of 2020. So over here, where is it? Let me see. Daily time frame, okay. Beautiful. Yes, 2020, right? All right, here it is. I see it. This is the pattern, okay? You see a double bottom over here. So this is basically the neckline, and this is the bottom, okay? Something like this. Yeah, well, actually, you have to draw it like this. It's not the most perfect double bottom pattern, but we can work with it. So in order to analyze where this price is going, you need to draw a line from the neckline to the bottom and paste this on the neckline when it's get broken. This is your take profit. Just make this green. Boom. This is how you trade it. This is your entry point, and this is your stop loss. All right. Entry. All right. And this is your stop loss. So let's say, for example, if the market, let me just make this white, okay, and then delete it. Let's say if the market is trading, you know, he's making a double bottom and it's about to break this neckline. And you see the moment it breaks this neckline, the market is going vertical. All right, so a lot of traders are waiting for the signal as well. The moment it broke the market and went up. But let's say, for example, if it's a fake out, it's going to go down again and it's testing this major support line, then you would have stopped out over here. You know, when the market's making a fake out, it's testing this line again and then it's going up. Sometimes that happens in the market. But this time, it went up and it didn't go back. It didn't backtest this important support line. It just went up and up and up and up. And then it corrected and then it went up again. So this is basically how you trade the market with a leverage position, okay? So you gotta have a strategy beforehand before you trade the markets. All right. Okay. The double top. Where is my tool? Okay. Laser pointer. Okay, the market's patterns double top. So it looks like an M. It's basically the opposite of the double bottom. It's a bearish pattern, which indicates that the market is going down. It's going to correct itself in order to continue the trend. If you look at the smaller time frame, it's the same thing as before. You just see an M of McDonald, okay? Just to make it easy for you guys, it's an M, and then it's correcting down. On bigger time frame, you see this M pattern. Okay, I'm gonna draw it for you guys again. This M pattern is what is happening over here when the market is reversing. Okay, so this is what you see over here. And it's basically logical that the market is going to correct itself because this yellow line over here is an imported resistance line. And we can expect some resistance at this level, and the market's going to correct till the support line, which is this lower line. And then it's going to continue up. So if you understand how this market works, you can take advantage of this and short the market. And then, excuse me, when it's going up again, forming this double bottom, you can long it again. So in a bigger time frame, you see different patterns forming in smaller time frame. That's what you got to understand. And if this lines up with the bigger time frame, then you understand that it's basically how traders work in order to maximize the profits along the way. And it's the same thing. How do you trade this? It's basically an M, but you do the opposite. This is your stop loss, okay? And this is your point of entry. Entry. And how do you measure it? Again, from the top to the bottom, paste it over here. This is your take profit. TP means take profit. Then you're going to take the money. And this is what you do in leverage trading as well. More information in chapter 9. So this is how you do it. All right, the head and shoulder patterns. How does this work? It's basically, it's like shoulder, right shoulder, and a head. It's not the shampoo bottle, but it's this is what they call the head and shoulder pattern. Let me see. Okay. That's so over here. So the head and shoulder is basically this. This is the left shoulder. This is the head, and this is the right shoulder. And then you draw this line. All right. So how do you do this? How do you trade this market? What do you have to do? Okay, we're going to discuss this. September 28th, 2020. We're going to show this pattern also in TradingView. September 20, which is over here. Here's the pattern. This is what I see. And we're just going to take this tool, which is called the head and shoulders. Take this, boom. This is the left shoulder, head. This is the right shoulder. All right? So, how do you trade this? So, this is basically the resistance line. You draw a line from the top to the bottom. Then you paste it over here. Like it's almost nearly perfect, man. Just look at it. This is where you put your entry point. Entry point when you're going to short this. Head and shoulder pattern is a bearish pattern, okay? And then you take your stop loss over here. Boom. Simple as that. This is how you trade it. This is your take profit over here. TP meaning take profit at this level. And of course, out of measurement, you're going to take some profits over here and here because you never understand where the market's going to go. Maybe it's going to go down over here, reverse, and then it's going to continue. Sometimes it's go like this as well. Then you have a falling wedge, and then it's going to continue its way up. Sometimes it happens as well. So you need to have a plan of what is happening. All right. It's a precedes a hidden bearish divergence. Basically, hidden bearish divergence is when a price, so let's say, for example, a hidden bearish divergence is, yeah, okay. So it's basically the opposite of a hidden bullish divergence. It's basically like when the price is forming a higher high, all right, while the RSI is forming a lower low, okay? This indicates like, is that it? Yeah, I think this is what it is, isn't it? Or is the opposite? Hidden bearish divergence. Let me look it up for you guys again. Before hidden bearish divergence. Yeah, excuse me. It's the opposite. Excuse me. Excuse me. Forgive me. So basically, the price is forming a higher high while the RSI is forming a lower high. That indicates, so it should be, where's my drawing to? It's over here. So this is the price, okay? Price, and this is the RSI. So the price is forming a higher high while the RSI is forming a lower high. Okay, meaning it's exhausting. The purchasing power is exhausted, so the trend is gonna get reversed. That is also what is happening, what you can see in the charts. Erase all the thing. Yes, on slide. Okay. So more information I'm going to discuss about us in the next chapters. Otherwise, it will become too difficult. So this is basically how you trade it. So this head and shoulder pattern is a bearish pattern. It forms. You see it happening in longer time frame, also in shorter time frames. If you see this, take this trade opportunity because it's basically literally free money if you trade it in the right way. So head and shoulder bottoms, meaning it's basically reversed. So if you look at it, it's 25th of December 2020, if I'm not wrong. So I'm gonna show you guys this as well in the charts, which is over here. Oh, it's in 2019 already. Jesus, time flies. So it's basically a head and shoulder, but reversed. If you draw a line from the neckline to the head, you paste it on the neckline. You see where you should take your profits. This is your TP, take profit. This is your stop loss. This is your entry point. And then you're gonna long the market, excuse me. You're gonna long the market. Boom. This is basically how you do it. It's a bullish pattern that indicates that the trend is gonna continue up. All right. So you don't have to. A hidden bullish divergence is basically the price. The RSI is forming a lower low, while the price um, is forming a higher low. Something like this. No. Yeah. Yeah. A lower high, excuse me. So the RSI is forming a higher low. Let me erase it for you guys. Like this. Yes. Sometimes I mix it up. So the price is forming a lower low, okay? A lower low. While the RSI is forming a higher low. Meaning the price is declining while the RSI is increasing. That means that there's enough purchasing power that the market has bottomed out and it's going to continue its way up. That's a hidden bullish divergence. All right, let's continue. We also have a pattern called a rising wedge. A rising wedge is basically what you see over here, and it's a bearish pattern which indicates it can also be bullish, of course, but most of the time it the breakout point is where the market's going. So if the market is decreasing in price and it's forming a rising wedge, it's basically an indication that the market is going to continue its way down. It's a relief rally, uh, and then it's going to continue its way down. How do you trade this? Very simple. This is your entry point. This is your stop loss, and how to measure where the market is going from the top to the bottom. You paste it over here, and then you have it. This is your take profit. Okay. This is on the 10th. Oh, this is some Bitcoin. Okay. Let's see in TradingView if I can find this chart for you guys. Give me a second. A falling wedge. A falling wedge. Most of the time you see it on smaller time frame, but you can also look. Basically, this is also falling wedge over here. Something like this. Depends on how you draw it. Now this is more a bullish flag pattern, if you ask me. Yeah, this is not it. This. I think I made this one. Yeah. Yeah, basically perfect, perfect. I found one. This is what they call. Oh no, no, we are discussing the rising wedge. Excuse me. So rising wedge. This is what a rising wedge is. Boom. and boom. So when the market was going down, it has a relief rally and then it's going down again. So it's retesting this base important support line over here. So how do you trade this? This is basically how you do it. This is your point of entry, okay? Entry, entry point, and this is going to be your stop loss over here, your SL, stop loss. And then what is the target? This is how you measure the target. Boom, and then bam. It's almost nearly perfect. This line over here, this is where your take profit is going to be, TP. Boom. It's a little bit perfect like this. This is how you trade it. And then you can make like, how much money can you make? With a 10x leverage, you can make, and if you short it, you can make 160% in profit out of this trade. It's very simple how to do it. So that's how you trade it. It's a that is a rising wedge. It's a bearish pattern. A falling wedge is a bullish pattern. I'm going to show you guys here as well how to spot it in this chart. A falling wedge. Let's see. Let's do it right now. Now it's at the 30th of December 2021. This was a falling wedge, okay? And the moment Bitcoin broke out of it, we can see that it broke out of it. It's gonna backtest the. It's gonna backtest probably this line again, this resistance line, which was a. It's probably gonna test it as a support, or maybe this yellow important resistance line, support line, and then it's gonna form a double bottom, and then it's gonna continue up and then down, and then it's gonna continue to 100k and whatsoever. This is my expectation of the market. So how do you trade it? Boom, point of entry, it broke out of here. You put your stop loss over here. All right, here's your stop loss. Look, a lot of people were trading this pattern. That's why, and this is your take profit. I personally didn't trade it. Why? Because I'm not trading so much anymore leverage trade because it's caused too much headaches. And this can also be a fake out, by the way. So a lot of people who are in a leverage trade position, they're longing this and they're getting flushed out right now because this is how they trade the market. The big whales are dumping the market just to make sure that you're getting out of your position, and then they're going to continue up with a double bottom that's going to continue up. All right, so you got to be prepared for a lot of stuff what is happening in the market. The theory is very simple, but in practical it's going to be very difficult. Okay, your point of entry is, by the way, is going to be over here when you break out of this pattern. Entry. And since you're trading on the longer time frame, like on daily time frame as well, because this pattern is forming on the daily time frame, you need to take a low leverage trade in order to trade this longer time frame. So a 2x to till 5x is pretty decent in my opinion, if you ask me. All right, that's how you do it. All right, an ascending triangle. An ascending triangle is very simple how to trade this. It's a bullish pattern, meaning it's indicating that the market's going up. If you want to recognize if this is a bullish or bearish pattern, you just have to think like this. This is a ball, if you throw a ball against this line, then it's gonna go up. So an ascending triangle is a bullish pattern. Okay, and how do you measure this? Very simple. It's also forming in the charts right now. This is an ascending triangle, because if you throw a ball right against this line, it's gonna go up. Okay, so how do you trade this? This is basically an ascending triangle. Okay, this is the, oh, excuse me, this is the neckline, okay, the resistance line, excuse me, and this is the support line. So how are you gonna trade this? So because this is on a big pattern, you're gonna trade with a low leverage, not on a with high risk leverage. This is you draw a line from the neckline till the support, and then you paste it on. Let's say, for example, the point of breakout is going to be near March in the 2022. So the take profit is going to be around 123k. So this is going to be your take profit, okay? But of course, we gotta realize that 100K is a psychological target, guys. So we need to understand the psychological target is also gonna be a big take profits for a lot of traders. So what I expect what the market's gonna do, it's gonna go up like this, boom, boom, boom. It's gonna go up, and then it's gonna backtest the support line to eliminate all those high leverage traders, and then it's gonna continue up, and then and then you have another ascending triangle, and then it's gonna increase in price. This is my expectation what is gonna happen with the markets. Okay, so this is gonna be your point of entry over here. Entry the moment it's gonna break the market, okay, over here, and your stop loss is gonna be over here. This is how I personally would do it. Stop loss, and your take profit is going to be over here. So you can see that in this big ascending triangle, you see different type of patterns being formed. So you can not only trade the big patterns, but you can also trade the smaller patterns as well in order to maximize all your profits. And with experience, you can expect what is going to happen with the market when it goes up in value. All right. A descending triangle is basically the opposite. If you throw a ball against this line, it's going to go down. And it's the same way you trade it here as well. This is going to be your point of entry point. This is going to be your over here your stop loss, and this is going to be your take profit. Since the descending triangle is a bearish pattern. All right. Discard. Okay. Support line broken. All right. And volume confirmation. It was still in Dutch. I don't understand why. Stop loss at the resistance line. Yes. No, it's in English. All right. So to summarize everything, guys. All right, how do you trade these patterns? How do you recognize these patterns? It comes over time. In the beginning, it's pretty difficult, but once you understand how these pattern forms, experience comes with time, and then you will recognize it beforehand when the patterns are being formed and how to trade it. Okay, so this is an image where it shows like the cheat patterns, how to trade all these patterns, when to put your entry, when to put your stop loss, when to take your profits, and so on. You can check it over here. Take your time by analyzing this chart. I'm going to put the link in the description as well, so you can take your time by analyzing this chart as well. And also, I want to show you guys the Bukowski chart patterns, which is this website over here. In this website, I'm going to put this link also in the video description. You can see all the majority of the patterns that are being formed in the chart is going to be explained over here. Like, for example, the ascending triangle, what we discussed. How do you trade this? What are the guidelines? What are the characteristics? The explanation, how do you trade this? And an example of what happens in an asset in history, okay? So this is a very important website. I'm going to put the link in the description as well, so you can study it for yourself. I personally put a lot of time into understanding these chart patterns, so you have to do it as well. And for now, let's do some exercise. So how many patterns, you can pause the video here, by the way. How many patterns do you see in this chart? All right. So take your time for yourself, pause the video and do the exercise. And you need to indicate as well if it's bullish or bearish. Do you see a double bottom? Do you see a rising wedge? Do you see a falling wedge? Do you see an ascending triangle, descending triangle? Think in longer time frame, think in shorter time frame, you know. All right. Pause the video, do the exercise. Okay, and now we are just going to continue with the answers. So what do I see? I see an ascending triangle longer time frame. I see a double bottom. I see a head and shoulder. I see a double bottom as well. I see a rising wedge, which can also be bullish. depending on, sometimes this is what I have to explain you guys as well. Sometimes the market is so bullish that it's ignoring all the bearish indication. So you have to wait for the point of breakout and a healthy retest before you're going to enter a position. Okay. So this is what I see in the charts. All right. To summarize everything, guys, if you look at the S&P 500, you can see that all the negative news, the FUD, fear, uncertainty, and doubt that you hear in the media and also on Twitter and so on is basically a reason for you to sell, basically. But if you look on the longer time frame, these were all events that were happening in the past years telling you to sell your assets because the market is gonna go down. But what happens on the longer time frame, it's gonna go up eventually. So in order to be profitable in investing is to buy and to hold for the longer, for the long run, meaning 10 to 20 years, 30 years. That's when you're going to be in profit. It's so simple. But in order to maximize your profit, in the meantime, you need to understand how trading works and how to deal with the emotions and how to recognize the patterns and the indicators and how to understand them in order to take a good position. All right? So don't believe the media blindly. Always do your research. Ignore the FUD. Have a strategy for a short time frame, mid time frame, a longer time frame. Learn from other markets because the S&P 500 is being managed as in the hands of big, healthy and wealthy people. They have so much money that they can manipulate the market in their way, and they have a certain behavior as well. And if you understand their behavior, they're gonna move into the crypto market as well, and they're gonna control this market as well. So if you see how they behaved, how they managed and controlled the previous market, you can understand how they're going to do it with Bitcoin and the crypto market as well. Because these players are the whales and they have a pattern as well. So this is the chart for of S&P 500. I'm going to show you guys in TradingView the S&P 500. And if you see on the longer time frame, you can see that all these reasons for you were to sell. Let's say, for example, there was a negative news over here. The market went down and then it went up. Another event happened. The market crashed, but over time, it increased in price. So you can see a big rising wedge forming over here. So I'm gonna expect a big correction in the future when the market's gonna dip like it did over here as well. Okay, just like in the pandemic phase. So this is what you gotta do. Just have a portfolio that is focused on the longer time frame, and you will see there is no reason at all for you to sell. All right, the assignment discussion, I do this in the live sessions, but since this is the YouTube version, a free version for you guys, I'm not gonna discuss with you. If you want this, you need to pay for it, of course, but you don't need it, trust me. And that was the presentation of this chapter. It was pretty complicated, but you need to do a lot of exercise in order to understand the market patterns and how to trade them. And always, you got to realize that this is not financial advice. This is the way how I do it. I've been very successful with trading it, and I hope you guys can learn from me as well and from my mistakes. And I hope you guys enjoyed this video. And as always, happy learning. Thank you so much.